today we're going to be talking about banking fees and what their purpose is and what they cover. And then over the next couple of days, you're going to be researching banking fees and finding fees for different banks. So it should be a lot of fun. All right. So the first fee we're going to talk about is a monthly service fee. This is a fee that you're charged to have a checking or savings account. These fees can range from no fee at all to $6, $7, $10, $15 a month. Oftentimes the bank will waive this fee, meaning you don't have to pay it, if you set up a direct deposit or if you maintain a minimum balance. So say you keep $1,000 in the account, the certain monthly service fee is waived. It just depends on bank to bank what they do, and each bank changes over time as well. Non-sufficient funds and overdraft fees. These are very expensive fees. These are sort of punitive fees. So this is when non-sufficient fund means that you didn't have enough money in your account to cover something that you purchased. Overdraft, they're the same thing, there's different names for it. Overdraft means you've tried to pull more money than is in your account. Again, they're both the exact same thing. They're oftentimes $15 to $20 per transaction. And they're very problematic. So if you were to use your debit card 4 times and not have money for it, that's $80 plus whatever you purchased onto your account. So you'll have a very large negative fund soon. Okay. And here I say typically about $25 per transaction. That they're very painful things to have. All right, out-of-network ATM fees. This is where you're using an ATM machine that's not part of your bank's network. It's hard to know what the network is. I'll show you the back of my ATM card. If you look at the back of your debit card or your ATM card, it will have a symbol like this. Hopefully that's able to see here. There might be a series of symbols. Those are your in-network ATMs. There's been a lot of consolidation of ATM networks lately. So if you see that same symbol on ATM, you should be pretty okay that your bank won't charge you a fee. Now, that doesn't mean that the ATM machine won't charge you a fee. They may still charge you a fee. So if you're out of network, you might get charged a fee by the ATM machine and then another one by your bank. So it might cost you $4 or $5 to take out that $20 cash. So I was saying in-network ATMs have the logos on the back of your card on them. You can kind of tell with that. I've not found it to be a very good method for it, but that is what's in network. APY, annual percentage yield. Also for out-of-network, if you go to your bank's app on your phone, they'll probably have an ATM locator for you, and they'll show you your in-network ATMs, and that's probably the most reliable way to see if you're going to be charged or not. APY stands for annual percentage yield. We'll talk a lot about APR in this class. You can think of APY and APR as being the same thing. It's just a different way of representing it. And the APY is something that the bank, they use the APY when they're telling you how much they're going to pay you in interest, because the APY tends to be a little bit larger than the APR. But they both represent the same thing. It's the amount of interest you're going to make in a year. So if you look at your APY is 1.2%, that means after having your money in there for a full year, you'll have earned 1.2% of that money as interest. And these are typically very small percentage of your balance. So a savings account isn't going to earn very much interest ever. APR is the annual percentage rate. This is the amount of interest you pay the bank for a loan. So APR and APY are very similar numbers. APY is a little bit higher, so when the bank wants you to think that you're getting a good deal, like when the interest they're giving you, they'll use APY. And when they want you to think that you're getting a good deal, meaning you're not paying much interest for a loan, they'll use the APR because it's a little lower. Card replacement fee. So this is the cost that they're going to charge you for getting a replacement debit card when you lose one. This can be either anywhere from free to up to $20 to $25 a card. Money order cashier's check fee. So when you go to make a big purchase and you bring in you want to write a personal check for like $17,000 to buy a car or something, Most places won't accept a personal check in that amount because they can't verify whether the funds are actually in the account. So what they'll ask for instead is either a money order or a cashier's check. A money order and cashier's check are very similar. They have the exact same sort of purpose. The idea here is that the bank is going to pull that money out. So if you go to the bank and get a money order or a cashier's check for $17,000, they actually pull the $17,000 out of your account and put it in their account. And then they're going to write a check from the bank, not from you, for that amount. So that whoever gets that check can see that, oh, this is from, Kitsap Bank. I know it's a good check. It's not going to get bounced. There's definitely money for this account. So that's the purpose of it. And these fees can be, oftentimes they're like you get 6 months for free or something, but they could be $5 or $6. They're a small fee for getting these, if there are a fee. Okay. Overdraft transfer fees. So you can set up, in most banks, you can set up your savings account to sort of be a backfill to your checking. So if you run low on checking, you go over your amount, they'll automatically pull money from savings, oftentimes in like lump sums, like, oh, we'll put $50 in. And to do that, there's oftentimes a small fee associated with making that transfer to you. Some banks don't have a fee for this, others do. It just depends. Okay. This is still better than getting that $25 per transaction charge. Deposit item return fee. This is another one that not all banks charge. This is where you've deposited a check from somebody and that check is bounced. So they didn't have the money for it. Their bank said, no, we can't honor that transfer of money. And there may be a fee charged to you for, depositing a check that wasn't good. Stop payment fees. These, almost all banks offer stop payment and they charge a fee for them. This is if you lose a check or something goes wrong and you're like, hey, someone just ripped me off. I want to stop payment on this check. You can tell the bank a specific check and they keep an eye out for that check and cancel it when it comes in and they don't honor the payment. These are usually pretty expensive, so they're usually in the $20 to $25 range per check. So if you were to lose a whole checkbook worth of checks, you wouldn't want to try and do a stop payment fee on all of them. You'd want to talk to your bank if you lose a checkbook. You're not the first person who've made that mistake. They'll have options for you to be able to protect your account from fraudulent checks coming through. And that's it, my friends. That's the sum of the fees. I hope that was helpful and useful to kind of get those words in your brain. Best of luck to you.